Hey, Dan Passarelli here. Well, it is finally earnings season. It kind of unofficially kicked off this week. Of course, next week is the really big week where we've got tons of announcements coming out. And I was looking at some of the earnings that happened today. For example, Lockheed Martin. And look, LMT is down a fair amount today as a result of earnings. Now, if we also go to Halliburton, which also announced, well, that one's up a bit. It's really difficult, if not impossible, to predict the direction of which way a stock will go once the earnings are announced. And so there is one thing that is not just somewhat predictable, but I would go as far as saying very predictable about earnings, and that's the volatility crush. Now, what that means is before earnings, options tend to get very expensive because everybody's buying them for protection and for speculation. That drives the price higher. That's called a rise in implied volatility. But then after earnings comes out, people either made their money or they didn't, or their hedges paid off or they didn't, and they don't need those options anymore and they don't want to spend the time decay on it. So they sell the options and that forces the prices of them down lower. That's called the volatility crush. And that happens almost all the time following earnings announcements. It's really important, and that forms the basis of how I trade earnings. And by the way, if you haven't already seen this, we're going to be holding a couple of presentations this week where I share exactly how my earnings trading system works, and you can register on the page that's about to pop up right after this video. This is Dan Passarelli. Hope that helps. Trade smart.